Understanding trust account transactions and restrictions.
Hello there. Today, we're going to talk about trust accounts. Specifically, we will address the kinds of transactions that can be made from a trust account and the restrictions that apply to these transactions. Trust accounts can seem a bit complex, but once you understand their principles, they become much more straightforward.
What is a trust account?
Before we get into the transactions, let's quickly define a trust account. A trust account is a legal arrangement that provides a way for assets such as money, investments, property, etc., to be held by a trustee for the benefit of a third party, known as the beneficiary. The rules of the trust dictate how and when distributions can be made.
What kind of transactions can be made from a trust account?
Transactions from a trust account usually involve distribution of assets to the beneficiaries. These can be monetary distributions or the distribution of other assets held within the trust, such as property or stocks. The trustee can also make transactions on behalf of the trust. This might include investing the trust's assets, buying or selling property, or paying for expenses related to the administration of the trust such as legal fees, tax payments, or accounting services. Remember, all transactions must be made in the best interest of the beneficiaries and must adhere to the terms of the trust agreement.
What are the restrictions on these transactions?
The restrictions on trust transactions are primarily dictated by the terms of the trust document itself. The trust document will set out when and how the trustee can distribute assets to the beneficiaries and what other types of transactions they are allowed to make. A common restriction is that the trustee must act in the best interests of the beneficiaries. This means they should manage the trust's assets prudently, investing wisely, and avoiding unnecessary risks or costs. Some trusts may have specific restrictions, such as only allowing distributions for certain purposes like education or healthcare, or limiting distributions to certain times or amounts. In addition, trust transactions are also governed by trust laws in the jurisdiction where the trust is based. These laws may provide additional restrictions or requirements on what transactions a trustee can make. That's it. We've covered the basics of trust account transactions and their restrictions. Remember, the key is to understand the trust document and the laws that apply to your trust. Each trust is unique, and it's essential to follow the specified guidelines to ensure the best for the beneficiaries. We hope this video has been helpful in understanding the ins and outs of trust account transactions. Stay informed and keep learning.